go. It's a very good morning, good afternoon, good evening, wherever you may be joining us from, and welcome to the Southern Africa panel at the Africa Fintech Summit 2020. My name is Samke Mhlongo, and I will be your host today. If you're in South Africa, you may recognize my voice from Talk Radio 702, where I bring you the weekly financial wellness feature on the afternoon drive with John Perlman. And I'm so excited to be joined by my panelists today, being Marcelo Sherma from Yoko, Lee Nike from TransUnion Africa, and Hannah Subayi Kamawanga from Dazzle Angels. Now, you're going to learn a little bit more about my panelists as we get into the conversation. But to kick off, I'd like to first apologize for our late start. We were supposed to be joined by Kunrad Jonker from Time Bank, who's actually graciously joining us from Hong Kong. He will still try and connect with us, but if he does not, then we will just have to continue the conversation without him. But do not despair, we have a wealth of knowledge sitting with us this afternoon. Now, let's get straight into the conversation. We've already lost a little bit of time. I will have you out of here at 5:15 South African Standard Time sharp. So without any further ado, I'd like to get straight into the Africa Fintech report, of which Time Bank contributed, but as well as Yoko. And Head of Expansion at Yoko, Marcelo, is here to tell us a little bit about what the findings were that they submitted in that report. And of course, Marcelo has a wealth of knowledge, having worked with a company that supports startups in over 20 countries, and who better to talk to us not only about the Southern Africa region, but also the outlook for the rest of the continent when it comes to startups, specifically fintech startups. Over to you, Marcelo.
Thank you, Samke. Good morning, good day, good afternoon, everyone. It's a pleasure to be here with you all, and thanks for having me share some of the things that we wrote for the board. Just for a little bit of background, Yoko is a fintech company based in South Africa. We really started with the idea of making it easier for small businesses to accept digital payments and digital card payments specifically. But as we started looking at other markets on the continent, we started understanding that different markets are very different in a way that payment works. And we often say Africa is not a country. The countries are very different. Different countries require different approaches. And we've done some, I think, really interesting research around really understanding what those differences are and what makes a country like South Africa different from other African countries when it comes to payments specifically. And so that's one of the thoughts we contributed to the report. And maybe just for some background, because people are probably dialing in from all over the world, South Africa is a very interesting payments market. We have and comparatively developed payments market, and very similar to many of the kind of Western equivalents. We have a good 80% bank penetration. Customers are fairly comfortable using accounts, using their cards, and the market is very well penetrated. But if you start looking at other African countries, the picture often shifts, where banking penetration is often below 30, sometimes even below 20%. But on the other hand, you have countries that have mobile money penetration that goes close to 100%, if not even higher than that. So what we started seeing is that, of course, countries where people use cards and where people use kind of traditional payment methods, and countries where people use mobile money and mobile-based payment methods function very different from a payments perspective. And so that's really one of the things we started getting into as we started looking at those markets. But what it also means is, if you look at it from a development perspective, we often speak about financial inclusion. We often speak about bringing people into the financial economy, and you really want to look at these things almost like differently for each market. Whereas in a lot of countries on the continent, the focus is very much on how do we get people into the financial system? How do we give them some sort of account, some sort of digital record of transactions, so they can get some level of savings or financing or loans or other financial products. In South Africa, what we've seen is that infrastructure is already well built. But on the other hand, what we started seeing at Yoko was that the merchant infrastructure was not built. So when the company started 7 years ago now, we found ourselves in a position where 80% of the population was able to use cards at the point of sale, but only 6% of small businesses were able to accept card at the point of sale. And so you have a massive exclusion from the financial system, but not so much on the consumer side, but much more on the SME side. And because an economy is essentially the aggregate exchange of buying and selling, if you're excluding merchants from the economy, it's as bad as excluding individuals from the economy. And so I think, to cut it short in the interest of time, I think the interesting comparison we wanted to draw out in the report is that as much as you can say South Africa is well developed and people have bank accounts and there's nothing left to do, we believe there's a massive opportunity to help SMEs and small businesses get access to the financial system because they're traditionally left out. Whereas on the rest of the continent, we believe there's still a massive opportunity to get consumers into the financial space and get consumers, banked in a loosely defined term in order to allow them to participate in the financial ecosystem, and then of course in the long term also transition to SMEs. So that's really the main hypothesis we wanted to draw out in the report, and just add a little bit of nuance to the conversation around what does financial inclusion mean on the continent in different countries and different regions.
We can't hear you.
We can't hear you, Samke.
You are on mute.
I remembered to mute myself.
No.
And I forgot to unmute myself. So you're on mute, the classic proverb of 2020. I was saying thank you very much for that, Marcelo. And really, Yoko is a great success story out of South Africa and Africa, having attracted international investments and also really having grown its initial merchant base from a couple of hundred to now nearly 100,000. But now my question becomes this, and I'll direct this to focuses on SMEs and small businesses, businesses or your clients. And I know, Leah, in a recent article you shared, you spoke about the challenges that small businesses in the fintech space actually face, not only in terms of regulation, which we're going to talk a little bit about, but the fact that, you may have people that have fantastic ideas, but they don't have the models to build sustainable businesses. And even where they do have the model to build sustainable businesses, you find that, especially in South Africa, the legislation is still playing catch up to what fintech is and what fintech looked like. What would your contribution be around, the environment and how ready it is to develop, support, and sustain small businesses? Because without small businesses, Yoko won't be in business for very long.
So I think that's directed at me, was that Marcelo? Not sure.
That question was posed to Lee, building on what Marcelo said. But once you've contributed, Lee, Marcelo, you can definitely add on to that. But Lee, please take it away.
Thank you, Samke. Thanks, Marcelo. I think from a TransUnion perspective, I look after Africa, which is traditionally a credit bureau. I look after 8 different countries from Kenya down to South Africa. I've done some really interesting research on SMEs specifically since the early part of April. In fact, we're producing what we call a financial hardship survey since the first week of the lockdown. We keep doing it. What we found is quite shocking. We found that almost a third of all SMEs, specifically those that most need the help in the sector that Marcelo referred to, which is the micro and the medium sector, have actually stopped working since the COVID pandemic started. So on one hand, you have a third of almost 2.5 SMEs that are struggling. They're struggling to have cash flow to go month to month, and they pretty much had to stop their businesses. When we start to think about this enabling environment around SMEs, we've had this chat many times. We find that many SMEs, they're actually born in the context of the idea they have, because it solves a real problem to them. Whether it's TransUnion, a large bank, whether it's Time Bank with Kun, we don't always see ourselves in the context where the idea or the problem finds itself. But one thing we've done in our research, we actually found that many of these small guys and girls are actually looking for partners to actually help them. They've got the idea born in the context, but they struggle to get access to the financing, to the merchant technology, to the loans that they need to make it happen. we actually did some research here around some of the government funding that was being provided to SMEs. And what we found was most of the TERS funding in South Africa was going towards those SMEs that were more geared towards the 5 years plus in terms of tenure. Those are the ones that typically have predictable business models, whereas the smaller businesses of lower tenure were struggling. So at an economic environment level, some things are being done. We have a small business development ministry. We've got funding from the government, but not enough is being done yet. And I think more and more, we're starting to see innovation happening in this space. The one thing I can tell you that I've been focusing on TransUnion, and if you don't know this, the business I took over as CEO back in 2017 has been around since 1901. So a lot of this tradition that Marcelo referred to, this is the way the industry has worked. And I think what's important for not just myself and Kun and Hannah and Marcelo is that we need to keep innovating and pushing this thing harder every time. So a lot of the innovations now happening on what Marcelo and I would call the common rails of the current ways of working. Whereas look at what's happening with WhatsApp banking, with Facebook and other technologies that are coming up in Kenya and Rwanda and Zambia. These are things that are challenging the status quo. And I find we need to find an enabling platform like you referred to and do more across public sector, private sector, as well as what I call Big Brother, where large companies and medium companies help the smaller ones to survive this tough time we're in, Samke. Thank you.
Thank you, Lee. And you speak about a number of I'll get to you just now, Hannah. A number of small businesses being born out of necessity, being subsistence entrepreneurs, if you will, and the need for big business to hold their hand. And I was actually coming to you, Hannah, with this because I know that you're an investor and you've got global experience, actually having worked for a large bank in London before coming back to Africa, coming back home really to invest in startup. So maybe you can build on that, what are you seeing as an investor? Because we know that South Africa is very attractive to foreign investment. It's really the gateway hub for investment into Africa. And
South African people, you always. Sorry, South African people.
We always say that, but are we really?
Yeah, no, it's not. Can
when
you
Kenya. So, please go ahead. Do give your opinion on
definitely. that. So first of all, I must admit I'm very happy to hear Lee and Marcelo talking about how there are synergies and lessons to be learned between South Africa and the rest of the continent. We know that because of our history for a very long time, there was a definitely gap between those two parts of the continent, and it's great to see that we are more and more working together. And I'm hoping that with the signature of the free trade agreement on the continent, we'll see more and more cross-border transactions between African countries, and hopefully the payment industry will follow as well. I think Marcelo had a very good point to say that Africa is not one country and that there are different drivers in the payment industry depending on the country in which you find yourself. The payment industry is typically driven either... Yes.
May I ask you, there's a little bit of a lag because I think we're all dialing in from sort of everywhere. May I ask you just to slow down a little bit because I don't want to lose what you're saying because it's so crucial.
Yes.
So let us
So definitely the payment industry is driven by different factors depending on which African countries you are in. And typically telcos like Safaricom are big in Kenya, but if you go to Nigeria, banks tend to be a bit bigger when it comes to driving change in the payment industry. So it's very important as an investor to understand the specific features of each of those countries. Interestingly enough, sometimes I feel like African countries are a bit more innovative or catering a bit more for African issues outside South Africa. For instance, we see more and more fintech startups looking at cryptocurrencies or, creating e-wallet where the consumer can pay in different currencies like dollars, South African rands, Nigerian naira to try to help, support the intra intra-African trade that we are trying to push for. So from an investment perspective, the last point that I would like to make is that I have seen an interesting play that has been very profitable for a lot of investors, which is called buy and build strategy, where you will acquire small fintech companies in various African countries and then build one company and then sell it to a global player. And this is, for instance, what happened with a company like DPO, which originally was one South African asset and then acquired a few assets on the continent and was sold at a big price, at a good price, to an international company.
Thank you very much, and thank you for calling me, along with other South Africans, out on us always having this idea that we are sort of the shining beacon of investment attractiveness for the continent, when actually there are a number of indicators that we're falling behind on. And even though, you know, we've spoken, Marcelo, about how South Africa has a mature or a developed infrastructure, but actually when it comes to, you know, fintech and that development and mobile money payment penetration even, we're still quite left behind. Even physical payment solutions like a point of sale machine, which is what Yoko brought to the market, we're still quite far behind. But I want to build on something that Hannah spoke about, which is cryptocurrency. And I'd like to throw this out to yourselves, Marcelo and Hannah, around what does cryptocurrency mean for the mobile payment system, and also for, I guess, fintech in Africa, because you know that your Kenyas and your Nigerians are quite advanced on that, especially with cryptocurrency mining. But in South Africa, if you mentioned Forex, you're most likely talking about a Forex scam. So how do we, number one, get over the fact that this market and this industry in South Africa has created for itself a negative kind of stigma, and what does cryptocurrency mean for fintech in the Southern Africa region? Because that could help us leapfrog some of the areas in which we lag the rest of the continent. Marcelo, you can pick up on that. Hannah, you can add to that. And Lee, with your background, I know you'll definitely have something to contribute.
Cool. Thanks, Samke. The crypto question is always an interesting one. So I would look at crypto in a bunch of different, in maybe three different ways. So there's crypto as a payment method, there's crypto as an investment tool, and then there's the kind of underlying blockchain technology that underpins the whole thing. I think why it's important is because we're starting to see different things coming out in different pockets in these segments, right? So if you're looking at Bitcoin as a payment method, I think that's the easiest one. It just doesn't really exist at a large scale, right? People are not paying for their coffee with Bitcoin. People are not paying for their lunch with Bitcoin, outside of course, early adopter cycles, let me put it like that. But it's not a mass adopted payment method yet in everyday life. What's become really interesting, and even some of the companies that Hannah mentioned have started adopting crypto as an investment tool for the users. So you take a company like Chipper Cash, where it started off as a way of sending money across borders, but now it's allowing people to invest in crypto, and it's dramatically reducing the barrier to entry for people to start investing, which is fundamentally a good thing. As much as it comes with all the risks and all the challenges of investing, but I think making it easy for people to access financial services is always good. And then the third thing is the blockchain technology, which I think is something that we're starting to see early adoption or early experiments come out where that can be used. And I think that's something that we'll still keep seeing for a long time to come. But yeah, so that's kind of how I would structure the space in my head. And where I see things going across the continent.
Hannah, you're still on mute.
All these points are very valid, so I will just focus on adding one more. From an African perspective, when you are in a country where the currency is very unstable with massive FX moves, which, by the way, is the case in South Africa, the question of using a digital currency that is recognized in the world could be actually a good option for a lot of small businesses and even, individuals like me. We've seen more and more institutionalization of the cryptocurrencies everywhere in the world, and we see well-known US bankers starting to advocate for cryptocurrencies. So I think there is definitely something happening in the market, and the regulators are monitoring cryptocurrencies more and more. We've seen in Australia, a stock exchange has been opened, enabling people to trade cryptocurrencies. So this is happening. Now, I think that for countries, and I'm not sure whether South Africa should be part of the equation or not. I don't want to offend you guys. But I think in countries where, the central bank is not really efficient in terms of, managing the currency, it can be definitely a good solution to move towards cryptocurrencies and seeing more fintech, developing cryptocurrencies as a payment tool. And in a country like DRC, I've seen 2 or 3 startups, working on that, starting to talk with the government and trying to see in which specific sectors these cryptocurrencies. Obviously, you need to pick the right one. Bitcoin, Ethereum, there are a bunch of them, and obviously you have to make sure that there is no fraud taking place in that industry. But we see more and more government in sub-Saharan Africa seeing an upside in potentially using cryptocurrency in very specific sectors.
Lee, I don't know if you've got anything to add on there.
Yeah, I've spent an entire career driving digital transformation as one of the top 5 consulting firms. I've spent the last 4 years taking an old traditional business and trying to transform it as well. What I would say, though, is that what the pandemic actually does for us, for many of us as techies or digital people, we talk about the acceleration towards digital. It's now become what we call the default state of the world. So this world of blockchain and cryptocurrency, this is actually part of what we call a larger sharing economy. We don't trust the system. We never had trust in the system. And the pandemic actually forces trust closer to things that we control. Like Marcelo has described, the cryptocurrency is actually on a layer of the infrastructure we call blockchain. Personally, I have a lot of focus on the blockchain as an enabling infrastructure to deliver this egalitarian type society. And like Hannah has said, South Africa is not just everything. I look after 8 different countries in the continent. And some of these countries are much easier to do with. My suggestion to those that are listening to us today is blockchain does bear promise of this cryptocurrency. What blockchain specifically does is it allows us to start a distributed type economy where we start to gain trust in new ways. And a place where we don't trust the system, trust the bank, and trust the lender, there's definitely advantages to what's happening. In India, we saw in the last few days that WhatsApp banking has launched after all the digital challenges. That isn't cryptocurrency the way we describe it in this context, but definitely a lot of movement is happening to challenge the status quo and challenge the traditional lender and the exchanger of money. So all this is good for the end consumer and citizen. And in the end, aiming to drive an egalitarian society, in my mind, makes sense and bears promise for both investment for Hannah and other investors, but also for the end consumer. We still have a very unequal Africa that we need to drive and solve for, and it's more than just financial inclusion. We're talking about social inclusion. We're talking about, at least in my country of South Africa, Hannah, we're talking about an income Gini north of 0.63. Anything to level the playing field in terms of the inequity is what we've got to focus on doing. I believe that this conversation today helps us towards a direction. Okay?
Thank you, Lee. Speaking about inclusion, speaking about reducing inequality, and speaking about making banking more accessible, I'm very excited to be introducing Conrad Wonka, joining us from Hong Kong, and he is the co-founder of Time Bank. Now, he's from the law discipline, but had the bravery not only to go into the new area of banking, but also of technology, which still sends me a little bit into a tiz when someone asks for my Dropbox instead of my Postbox address. So Conrad, kudos to you for being a co-founder of one of only 3 digital banks in South Africa, being Time Bank. Can you tell us a little bit about some of the achievements that Time Bank has managed to gain? And also, can you tell us a little bit about perhaps some of the challenges that you're experiencing in growing the customer base and actually ensuring that you're advancing banking services to all of South Africa's people?
Hello, everyone. Lovely to join the conversation, and thank you for that kind introduction. Yes, those of you who are close to South Africa will know that we launched TymeBank in February last year. So we're roughly 20 months into TymeBank's presence in the market, and very pleased with progress. We just passed 2.4 million customers in TymeBank, which makes us one of the fastest growing digital banks in the world, with about 55% of our customers being active on a 30-day rolling basis. Again, something we're very happy about, and it benchmarks well against other digital banks. What we're particularly pleased with is that our customers are starting to really like us. We've just gotten the Net Promoter Score results out, the first time we've been benchmarked against the other banks. And we came in at a score of 55 against an industry average of 29, which gives us the second best Net Promoter Score in the country right now. And 20 months in, we're really pleased with that position. We've also just been awarded a position in the top 100 banks in the world by Forbes, and in that ranking we were second in South Africa after Capitec. So early days, but we're really pleased with our progress. I think what makes us unique as a digital bank is that we have this emphasis on the physical retail environment. You know, there's an old Sufi saying that we can only walk from where we stand. And the reality is that most people in countries like South Africa, other emerging markets, they're not yet fully in the digital world. They very much still shop and do business in the physical and cash world. And what we've done in Time is we've integrated into that physical cash environment through two things. The one is we have in retail stores across South Africa and Pick n Pay and Boxer stores, as well as in ZCC church venues, we've got kiosks where you can go up to the kiosks, and in 3.5 to 5 minutes, you can actually open a bank account, get a personalized debit card printed, and walk away with a live bank account. And what we found is that more than 80% of our customers have come to us through the kiosks. Although you can also completely onboard digitally, people have enjoyed the kiosks, preferred the physical kiosks above doing it on their phone or doing it on a tablet or computer. The other thing we've done that I think people in East Africa and other places would understand really well is we've gone to a lot of troubles to integrate into physical retail environments from a cash perspective. And so right now, compared with the other banks in the country, the big 5 banks, we've got the most places in the country where people can deposit and withdraw cash in real time from their TymeBank accounts. So that's just a quick introduction, and maybe let me stop there. We can talk a bit more about challenges with the other people on the call.
Thank you very much, Conrad. I actually have a question from the Q&A chat box, and anyone watching, I would encourage you to submit your questions on the Q&A chat box, but also know that I will be making available 10 minutes at the end of this discussion for you to post your questions. The question here says, how do you see telcos and banks working together for financial inclusion in South Africa? Fintech seems to be the glue in between, and how is Fintech's role, will Fintech's role change if financial services move to telco-led? And I think I'd like you, Conrad, to actually take that question, and then I'll open it to the rest of the floor, especially when you've got advancements such as WhatsApp Money that could actually see mobile apps fulfilling the financial service. Conrad, and then anyone else that would like to add on to that solution.
Yeah, I think that's a great question. You know, I think we're in an incredibly exciting stage in the evolution of of the ecosystem, the financial services ecosystem in Southern Africa. And it's partly because a lot of the basic infrastructure that we needed for fintechs really to thrive have not been in place for a long time. So a lot of fintechs got stuck on just solving the basic problems of integrating into the payment system, getting payments done, etc., etc. But increasingly, you have players like us, other digital banks, and even big banks opening up the payments ecosystem to make it much easier for fintechs to integrate. And so what I see as the next phase is that we're going to have fintechs solving point problems, solving problems in value chains, solving problems for specific ecosystems and use cases. And as the API environments are maturing, it will become easier and easier for fintechs to collaborate with players like ourselves. And certainly our longer term vision, although we're not quite ready yet to open our doors, is that we hope to create the kind of mature API environment which would allow a multiplicity of fintechs to play actively in the ecosystem, solve specific problems without having to spend all their time and money solving the basic problems of payments integration and participation.
What does that mean for you, Marcelo? What does it mean that people can make and receive payments on their phones without the need for a speed point? Why would local then still continue to exist in that case? And Lee, once Marcelo is done, how would you, as TransUnion, measure consumer behavior when it's bypassing the traditional platforms that you use, to measure payments and consumer behavior and delinquency? So those are the two questions for you, Marcelo and Lee.
It is Game of Thrones. Who owns the customer?
Yes, so Hannah has a very interesting point here. I think the way I would say it is that at the end of the day, no matter what the payment method is, customers will still want to pay merchants, right? And the way we look at it is an economy is essentially made of a huge number of transactions between individuals and businesses. That's what happens. Now, if people use cards, if people use QR codes, if people use crypto, if people use other things, that changes how you solve that problem. But the fundamental problem of friction at the point of exchange is, I think, something that's going to be around for a while. And the solution to that time, but the fundamental problem of how do we help make it easier for small businesses to get paid, I don't think that's gonna go away anytime soon.
Lee.
I think from my side, Samke, I think Kundra talks about a really good point. I referred to earlier before Kundra joined about this thing we call the sharing economy. We've been calling that for a long time. I think the truth is that we've assumed too much that we need to do everything by ourselves as large business and as small business. That has actually allowed fintechs to disrupt established businesses. But as Marcelo will tell you, the likes of Yoko, Time, even TransUnion, we are always looking to see how we'll get disrupted next. Now, a while ago, the banks had what we call an ECNS license, which allowed them to move into the same space as the telcos. We now see telcos moving to the banking space. The convergence of industries is a normal in this. In fact, whether you're a bank, a telco, or insurer, everyone is going or vying to make me the center, or Hannah or you the center of their universe, because it's more than what you do. And I think many people care about how we do things. As consumers, we don't care about the how. The wiring, the common rails is actually not important. So what I would say to you is a couple of things. I say, one, disruption is going to happen regardless. If you aren't spending time asking yourself, how do you not become Blockbuster or Nokia, then actually you're not focusing on where the disruption will come from. The things that Kun and Marcelo are working on are going to catch people off guard. That's what disruption is. So what are you doing to kind of disrupt yourself? Like I mentioned before Kun had joined, the business I took over was a monopoly for 90 years in Africa, in South Africa, right? And we started Hannah losing all day long. So losing becomes a pattern. You got to find new ways to jump in. I actually made a note of something Kun said. I'm a massive fan of the sharing economy, and I believe that we shouldn't do everything. Yoko shouldn't be everything to me. Time shouldn't be everything to me. We should find a way to find modular solution, strong USPs or CVPs that talk to modular components, and find a way to expose that value into the economy. Kun spoke about APIs or web services or marketplaces, whatever they are. We need to recognize that we and our value is the value of the collective. When Hannah spoke about other countries within Africa, we're actually very slow as South Africans. If you go up to Kenya or Rwanda, they're twice too fast to get it to market. We spend a lot of time thinking and planning, and their view is, let's do it together. 1 + 1 is equal to 3, 5, or 10. So my advice is focus on what you can do, be good at doing, what you're not good at doing, who can I partner with? And then if I've got the money or the capital or the support, like Hannah does in this case, how can I partner with those that have the fledgling ideas and help them take it to market? In the end, if we solve these problems that matter, we will all win for a better Africa, but also for our commercial interests as well. I do believe that they both coexist. I don't want to be a capitalist and just make money without getting the benefit. These two actually exist really well in a continent like Africa, Samke.
I'm a capitalist, but I believe that, but I do believe that the fintech industry is very exciting for investors because it's an industry that is very versatile, very sophisticated, and one fintech startup can always add new revenue streams. So if we talk about, for instance, Yoko and the payment devices that they were selling, then on top of that, you can start collecting consumer data information, and then you can monetize this data and sell it to banks and to insurance. You can start providing credit to your merchants and your customers because you better understand the cash flows as they generate. I mean, it's so fascinating for me as an investor to see the level of sophistication that fintech startups have, including in South Africa, and more recently, I've seen some proposals of startups that are offering an option buy now, pay later, allowing the South African consumer to have access to goods now, even if we are in the middle of a pandemic and an economic crisis. I've seen more startups trying to partner with big corporates and helping them in terms of paying their employees maybe on a weekly basis instead of the monthly basis, and at the same time educating employees in terms of how to spend your wage, how to spend your salary. So I think there are a lot of things that are still happening in the South African fintech industry that are super exciting from an investment perspective.
Hannah, you spoke about, Africa and, South Africa specifically, and I want to go back to that point about South Africans thinking, we're the golden child of the continent. And you speak extensively on and off camera, I know you about the shared economy. I want to address the elephant in the room because we've got the whole world watching. Hannah, as someone who is not South African, is it easy to do business in South Africa as a non-South African?
I have my PR, though. I have my permanent residence. Don't chase me.
That's fine.
I'm kidding.
Even if the law says you are a living, breathing South African citizen, I know that on the streets and the lived experience of people that are not South African is very different. And, having friends from all over the continent, I know that the reception of South Africans in other countries is much friendlier than the reception of other African nationals into South Africa. So I want to address the elephant in the room, because I know there's people from all over the continent watching us. How easy is it to do business here?
Look, I think Lee mentioned something that is quite obvious, but indeed the level of inequalities in South Africa is quite astonishing, which makes it a bit difficult from a business perspective, to address the right market. So there's like either you target the 1 or the 5% or whatever you call it, or you try to target the rest of the population. The dynamics are not the same. The FX situation is also a bit unstable in South Africa, with the rand moving from 13 to 15 to 20 and back to 17. So I guess when you are an international investor investing dollars, is definitely something you have to take into account. I think there are some complexities in your local legislation based on, obviously your history, which is a bit difficult sometimes for a foreigner to comprehend. But at the end of the day, obviously South Africa has many positive features as well. And when it comes to, at the end of the day, South Africa is the biggest economy in Africa, right? The level of education, internet penetration, all those things, right? So it remains a country in which you want to invest, but it's not as straightforward as you could have expected. And if I compare, for instance, South Africa to Egypt, which is definitely on the other end of the continent, from a certain perspective, Egypt seems a bit easier to navigate as a foreign investor than South Africa to some extent, but this is a conversation for another day.
Thank you. I have one more question, which I'd like us to get to short and sharp before I hand over to you for final thoughts and before I let you go. So Sophie must start by saying one of the key challenges for the financial services sector in South Africa is consumer debt. How can the fintech space transform debt collection? And I mean, Lee, you're best positioned to answer this question.
I guess from my perspective, I have a vantage seen across both established and the kind of the new players in this market. What I would say, I don't know if fintechs are best positioned. If you chat to most fintechs, whether it's Yoko or in this case, or Tala for that matter, a lot of effort gets focused on actually increasing the invisible market moving the food chain. So on one hand, you can look to the fintechs to solve the debt problem. I actually like better of how fintechs are able to see into the invisible part of the market and how people, how banks and then governments see Lee for more than what the data says he is. I think fintechs have the leverage to extend themselves beyond traditional norms and standards to find the use of alternative data, alternative technology to help to understand people. So for me, I'd say great to help with the debt and the rehabilitation. The real power is fintech helping to see people for the potential they have, rather than just seeing them for the tick to the boxes against their name. And once they help these people move along the journey, then these two markets converge. That does help connect the egalitarian society I referred to earlier, Samke.
And definitely, I know that TransUnion has really advanced consumer education as well. So going beyond being just a measure of delinquency and repayments, but actually taking the mantle and educating consumers in terms of their finances. Josephine Kukongo says, South Africa currently has banking monopoly in the SADC region, often to the detriment of smaller economies. How are SA fintech players planning to incorporate the smaller economies in the region that are currently dependent on large SA banks for banking? Kunrad, co-founder of a digital bank, I think you are best positioned to answer this question.
I hear people talk a lot about this banking oligopoly in South Africa and how it sort of just stomps all over the subcontinent. I think there are so many spaces where the oligopoly is not well placed to play. And the room for innovation, the gaps in the market, the extent of banking profits that is still sitting on the table in Southern Africa is mind-blowing. I think not to in any way underestimate the power of the oligopoly, and we've certainly felt it in our first 20 months in the market. I think the answer is creativity, innovation, and courage. Get out there, find the gaps, and compete hard with these guys.
Thank you very much. Ladies and gentlemen, that's it from our questions. I'm going to allow a few more minutes. We are 5:15 on the dot, which is when we were scheduled to end our conversation, but I have convened 4 minutes just to give you, as our esteemed panelists, a few seconds each. Just give us your closing remarks. So I will go with Hannah, Lee, Marcelo, and Kunrad. So Hannah, Lee, Marcelo, Kunrad, your closing remarks, please, before I let you go.
No, the payment industry, and more generally speaking, the financial services industry is really an industry that has outperformed in Africa in the past 5 years. It's great to see that now it's really a focus for investors, for the regulators, for governments, not only because financial inclusion is key, from an ethical perspective, but also from a financial perspective, it's just very profitable, and it can help and grow as the economy. I'm super positive when I see a company like Terraco building massive data centers in South Africa and the rest of the continent. We see more and more people trying to invest in the digital infrastructure support, the industry. So hopefully in the next 3 or 5 years, we'll continue to see growth in the industry. We'll see more trade within Africa, and the payment industry will be helpful from that perspective as well. So super excited.
Very good. Well, Samke, thank you for that. I guess it's been a good conversation. My final words would be that I think that part of the new normal is this concept of distribution and sharing. It's almost become overheard. But what I would say practically, because we work with 5,000 clients in Africa, I would say there are 2 sets of things we're solving for. I think big established players must find opportunities to connect to third parties such as fintech to provide these modular services that couldn't refer to. And if you don't have the infrastructure, the architecture to make it possible, they're actually holding themselves back from innovation. So I would think with big players, find a way to open up your doors and the control management to allow the smaller guys. There's value to be had on both sides. The fintechs and the startups and the payment players that we refer to, I would usually say, I find that many fintech and startups always start from scratch for some odd reason. There's commoditization happening. So you're building a module for churn, you're building a model to help you find leads for your business. These are becoming commoditized and becoming available in the exact same marketplace that we spoke about earlier. So think about who you want to be, not how you would do it, and find ways to put together the recipe for success and then partner to deliver that success. No one wants you to be everything to them. Work together, collaborate, so we all can benefit in both commercial terms, but also as citizens of Africa. Thank you, Samke.
Thanks, Lee. Thanks, Samke. Thanks, Hannah. And thanks for the fun panel. I think for me, my closing thought would just be, and it speaks to how I started and what Hannah mentioned as well, is just keep. I think for people in Southern Africa, there's a massive opportunity to learn about a lot of the fintech things that are happening on the rest of the continent. I think we often find ourselves just assuming that we're the pinnacle of the fintech world anyway, so we just go and learn from whatever is happening in Singapore or in the US, whereas there's a lot of innovation happening on the continent. And I think equally, I believe that entrepreneurs working on fintech solutions on the rest of the continent have a lot to learn from South Africa as well. And I think there's a lot of opportunity for knowledge transfer that often isn't happening as much. So I would just share these encouraging words to close off with, that there's a lot of opportunity to learn and to exchange, and I hope people will use the conference for that as well.
Thank you for the lovely panel. Really interesting listening to the other people. I would sort of end with saying that the ecosystem is the name of the game. And to echo, I think, what a number of people have alluded to, do not spend 10 minutes trying to redo what somebody else is already doing, trying to reinvent the wheel. Figure out how to work with the best of breed players out there, and figure out what is the unique thing that you can add to the ecosystem, and put all your energies into that. There's still a lot of space. There's a lot going on, but there's still a lot of space out there to do unique, interesting things that will meaningfully contribute to people's lives. And remember, ultimately, it's our customers who do the voting with their feet and their fingers and their eyeballs. And so unless you can find something that people really love, you're really not in the game.
From me, Samke Msongo, I don't have much to add except to thank my panelists, thank the conveners, Zacharias, and the team for putting this together, and to say, work together, collaborate, be innovative, and have courage. Stay safe, stay blessed. Until we meet next time. From me, it's goodbye. Cheers. No.